Okay, thank you for tuning in to another edition of the Vulcan Report. Moving on, we're going to now take a look at the precious metals. This is a chart of gold. I neglected to include these in the last video. I guess I just ran out of time here. Um, this gold chart and the silver chart, as you know, it's they've been really beating down these metals for a long time. Personally, I believe that the crash has lasted longer than the actual rallies did. All right, of 2 years ago. So actually, you know what? It was really back. I want to say 3 years ago. Yeah. So we had basically a 1.5 to 2 year rally, and then so far now we're having like a 3 year crash. So this is pretty significant, and it's really leading me to believe that Bubble 101 is being done in the precious metals markets. What I mean by that is when they want to crash a market, they bubble it up first to significant levels. When they want to rally a market, they beat it into the dust and grind it under the surface of the earth before lifting it up. So the next rally or bull market run in these metals should be extremely explosive, taking out their previous contract highs easily. But for now, this is where we are. We are deep in bear territory. We have extended downside momentum here, hence this red line right here. Okay, big three massive candles in a row. Excuse me. I mean that's uber bearish, and we had a nice little run here as we got back above the long-term trend line resistance, and it stayed above it, for a little bit. Nice run here, but just couldn't hold it. Prices crashed right back down again, which is kind of what we were expecting. You had massive resistance up here anyway at the bottom of the Kumo cloud. So you knew that it was just a matter of time before it picked up and crashed back down again. And that's exactly what you saw. All right. Once it hit these acceleration points, it just crashed down, and it did so excessively. All right. It managed to close above these acceleration points, but then it just lost it and it just collapsed. So right now we're just looking uber bearish in this market, and I don't see this changing anytime soon. So right now you're probably going to get a continuation from Friday because we did manage to rally back a bit. We did not close on the lows. All right. So you have this nice little area here, this air pocket here, which prices should easily be able to get it back down into there, and we'll probably close somewhere in here if we're going to be forming a base. But right now, this continued selling pressure is really weighing this down. I just don't see anything happening on the long side of these markets. Every time you try to play it, it ends up going down and hitting new lows. You get these little spike pops like back here on the September the 23rd, only to have it close back down and then hit a new low. Even on an up day or rally bar, you still spike down. So this market likes to spike up and spike down. And then you see here, it took out the previous day's close, but closed below it, and then we set up for a nice reversal back down again. That's the nature of these metals right now. That's why people are really starting to lose favor with them and fall out of love with them, and they're selling their physicals. They're just getting disgusted. They're like, I don't understand this. Well, I mean, you have to look at it from the fiat standpoint. The fiat standpoint says that the dollar has been getting strong, and equities are where it's at right now. That's where people are making money. So what do? They liquidate their physical metals holdings to finance those long equity positions. All right, that's what's happening. It's really not rocket science. It's just the way it is right now. So what you be looking to do here is wait for another opportunity to short. You missed it up here at the last acceleration points, so you're gonna have to wait now for the next move to do it. And who knows when that will be. You just have to do it day by day. You probably get another entry point probably on maybe Tuesday and Wednesday. But you just have to be patient and wait and see if you're gonna, short this. That's all I can say right now on the gold. It's just looking really bad. All right, now taking a look here at silver. Pretty much the same story, except for silver is a lot weaker than the gold. It couldn't even get back above the long-term trend line resistance here, this blue line. We bumped up against it, but we didn't get anything going above it like we did in gold. And then we just crashed right back down again. So this scenario here is way more bearish. We can't even take out and close above the price reflection points up here. All right, key reversals didn't happen around these points. We traded at them, but we could not close above them. Hence, here's all the downward momentum in this market. I don't know what and when it's gonna do anything here and take this out and try to do something bullish. We tried here, we didn't get anywhere. Now we're way back up here and we're way down here. This chart is also a mess. I mean, if you're bullish, your heart is broken. Every time you tried to buy this market, you've been stopped out. What do? Look at this. Every little uptick you try out, even when it tried to lock in a little bullish momentum here, what does it do? It just fails. Pretty much every rally in silver has been nothing more than a shorting opportunity. And likewise, that's what they've been doing. Every rally. Not some rallies, but every rally. That's what they're doing. They're beating it down into the dust every time. So basically, the only strategy that's working here is selling the rallies and these precious metals. Nothing else we can do about it. So for right now, based on Friday's action, your price inflection point is so far away. It's not even worth talking about right now. Is once again, there's just not a whole lot you can do right now. There's like really nothing that you can do. You can take a look at 1647 price inflection point. A close above that would put an end briefly to the sell-off and see if we can get something going. The target from there would be 1729, 1730, which is back above the trend line resistance. I don't think that's going to happen. Again, every time we managed to get above the price inflection points to form reversals, all we did was what? Set ourselves up for more heartache, and then correction came. That's just the way it is. It just doesn't pay to be long this market right now. I mean, you can make maybe a buck out of it playing some of these reversals, but then again, what are you going to do? There's not a whole lot you can do in these markets right now. So gold and silver still out of favor, still looking awful, looking very bad, and I don't see that changing anytime soon. I wish I had something better to say for you in those markets, but I don't. All right, taking a look at the Russell here, a little bit different. It's closer to the Kumo cloud. It just broke out above the Kumo cloud. So the downtrend it is put an end to, and we're now officially in a bull market. See, in the previous video when I was showing you how the anatomy of basing when markets are bottoming out, see, we closed below those weekly supports. That's my point. We closed below them before we started to correct. then spike down tests, then you break out. See what I mean? This is what I'm talking about. This part right here. Close and then reversal close. Key reversal right here. That's what's lacking in your crude oil market right now. We don't have that yet. So we're going to need more time to test the crude oil and see what it's going to do. All right, so just remember that. So with the Russell, here we are. Price inflection points well below the market, keeping strong support. Trend line support is way down here. This is lifting up and it's gradually going to rise and track with the price action and get above the Kumo cloud. Once the long-term trend line gets back above the Kumo cloud, that's really going to give a lot of push, a lot of momentum to the Russell, and we'll be off to the races again. But we do need to get this trend line above this Kumo cloud. This is still kind of dangerous. We could easily collapse. This market could easily come back down and move faster than the trend line and come back down and test it. All right, so just remember that we're still bullish, but it's kind of a weak bull because we're prices above the Kumo cloud, yes, but your trend line support is not. It's below the Kumo cloud. Even though this is a thin cloud, like a cloud vapor, if you will, we got significant air pockets right here. This big gap right here. So we could pull all the way back. We could come back down here and test this, and still have a somewhat weak bull case because you're above the trend line but below the Kumo air pocket. Okay, not good, but it should be a bubble enough to push this line as it rises. Should help push this pocket above the Kumo cloud, and that's what we're waiting to see. All right, so still bullish. It's still you're still trading both the long and short sides of the markets, but I'm just giving you the technical picture for the day on this one and what you should be looking at and what you can expect from it. Okay, looking at the Dow is the same identical picture except for price inflection point is a little bit closer than the Russell. Okay, see, it's right here. So it's right at the top of the Kumo cloud. So again, weak bull, but the only difference is you don't have much of an air pocket below the Kumo cloud. So still, danger zone. Use caution when you're trading on the long side from right now until this trend line gets above the Kumo cloud. All right. Okay, looking at the S&P 500. Once again, same thing. Air pocket, trend line support below the Kumo cloud here. Here's your price right here. Again, weak bull. Proceed with caution on this one as well. All right, let's do something new here. Let's take a look at our famine markets, okay? So we can track famine in the land. Here is the price, the chart of the soybeans. Nice, humongous storm cloud. All right, this is not a Kumo cloud. This is a storm cloud. Look how massive this Kumo cloud is, okay? Massive. Prices are struggling to break out above it. Long-term trend line support below the Kumo cloud, almost looking kind of like the Dow and the S&P. We've come off huge in the grains. Look at that. Look at that. Look at that. Huge movement, man. Huge. Okay. We went from beans in the teens to all the way where we are now. Okay. So prices are starting to lift up now from the lows here of 921. Now we're at 1042 and a half. So the contract's already moved more than $5,000 a contract. All right. So that means that prices are starting to head up again. All right. Just remember that. All right. So as the stock market is getting more expensive, so is the cost of eating. All right. So let's take a look at one more and we'll wrap this up. Okay. How much is it going to cost us to buy meat at the store? Well, it looks like we're catching a break. This feeder cattle chart, we broke below up here. We were nice. We were bullish, trading above the Kumo cloud, trading above the long-term trend line support, and we just broke that. All right, we just broke that trend line support now. So now we're gonna see if we can test the bottom of the cumulus cloud, which is down here. If we can stay above this and get back above here, then we will not be able to say it's the end of the bull market. But as of right now, keeping it real, all things considered, we are now looking at the end of the bull market run in feeder cattle. We just topped out up here. Now here we are down here. Oh, what a day brings, right? Now, the reason why you see this huge gap like this too is because contract rollovers and stuff like that, okay? Remember, we're already in 2015 now in the feeder cattles. Thinly traded market. I try not to operate too much in the meats just because they're thinly traded. Even if you're right in the direction of the market, it can be difficult to liquidate, especially if they have a lock limit move. I don't like to trade markets that are thin and have lock limit moves. The grains have lock limit moves like the soybeans, but soybeans moves like the S&P 500, and you have fantastic liquidity, so you can get in and out of that even if you're caught in a lock limit move against you, which I have had happen to me before. It wasn't a big deal. I was able to get out the same day. That's how liquid those markets are. Okay, so just keep that in mind. But right now, this is what we're looking at. So cost of meat we should start to get a break on that as long as we stay below this trend line, this long-term trend line resistance, which was support, now it's resistance because we're trading below it. As long as this stays like this, we'll get a break at the supermarket on the meat, which is much needed going into the holidays. All right, remember, you can also follow me on Twitter, and you can take a look at the blog to get more technical information on the markets. And remember, take what you can, give nothing back. Be encouraged.